Hello, dear traders. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions. Today's video is about a powerful doji pattern that we know as shooting star. Okay. So what is a shooting star? Is basically a bearish reversal candlestick pattern that typically appears at the end of an uptrend. It signals that buyers push the price higher, but sellers regain control, driving the price down by the close. As you can see here on the graph, the pattern shows a very top at the end of an uptrend or a correction. How is it formed? Let's go to our charts. I previously searched my charts in order to identify these very shooting star. As you can observe, this is a shooting star, right? So we have a small body with a long upper wick. The color doesn't matter. Could be bull or it could be bear. Basically, it is not relevant. Could be perfect, so no lower wick, or it could be imperfect with a slight lower wick. This is the case in here. For example, this one has a little lower wick, but the main formation is very interesting, right? So how we spot this? The very first rule for this shooting star to be valid is that it is shown at the end of a bullish trend or in that moment of the trend. In this case, we see a lower high. We see here a higher high. This is a higher high, right? And this is going upwards. When it reaches this point in here, sellers push down. That is the reason for the wick. And I have a small body. That is a very nice indication. Now, we have to observe something, and it has to do with the size of the wick. Ideally, the size of the upper wick should be twice the size of the body. So if the body is 1x, the wick should be at least 2x or more. Let's confirm if it is so. So I use my tool, my crosshair. I measure the body. The body is around almost, you can say 13 here, 13 points. And let's see the wick. Of course. Well, it is around 108, right? So 108 versus 13, of course, is a very powerful shooting star. Okay. That is the second thing to observe in here. The third aspect is that the next candle has to be bearish. And I can see here that the next candle, this one, in fact, is a bearish candle. Okay. So what is the thing in here? I am checking this pattern on the 1 hour time frame, right? It means that the shooting star took 1 hour to be formed, and the confirmation candle took another hour to be formed. Again, things that I have repeated in every video that I upload is that trading is the art of patience, right? Again, we don't trade solely based on a single candlestick pattern. No, we trade always based on what? Based on our trading plan, on very clear signals and indicators. The thing is that when we spot a pattern, is an additional indicator that adds up to my trading plan. And if that pattern is strong and is aligned with my trading strategy, it's going to be a very powerful pattern to be traded. Okay. The question here is how to trade this pattern, the shooting star. Okay, it's quite simple. Once we have the confirmation candle, the bearish candle, that is going to determine my entry point. So what is my entry point in this case? I'm going to enter here when this candle has already closed. So that's my entry point. I'm not going to talk about anything related to position size or something like that, because that is something that we already discussed in previous videos. So I assume that you already know the position sizing and everything regarding there. This is just the discipline of how to place a trade. Remember, we never trade with direct market. We always place buy stops, sell stops, or sell limits or buy limits. In this case, it's a sell stop, right? So what is that? A sell stop is when I wait for the price to reach my entry point to trigger my trade. So this is my entry point. Now let's see the measure of the ATR. In this very moment, the ATR is 10 pips. So I'm going to do my calculation, right? So that is going to be 10 pips. Going to be 10 pips times 1.5 for the ATR calculation. That is going to be 15 pips. So the distance for my stop loss is going to be minimum 15 pips. So 15 pips is around this distance here. So this is my stop loss, right? So if my stop loss is 15 pips, remember the calculation that we always do in order to, to say that it's worth the trade. If my stop loss is 15 pips, that means that this is 1R. So my take profit is going to be what? It's going to be minimum 30 pips, right? Those 30 pips will represent 2R. So my ratio is 1 to 2, right? So let's see where I can get 30 pips. I use my tool. This is my entry point. And I reach my 30 pips around this area here, a little slightly below that. This is 30 pips. That is my take profit. All right. Remember, my entry point was here, right? So when this candle was closed, so I insist that when I placed here on this very area, when I placed here my entry, the candle that activated my trade, this is the trigger candle. This is the trigger, right? So this candle activated my trade. And okay, in this hour, because remember, I am working on the 1 hour time frame, this very hour was positive for me because was going on my short direction. The next candle was a kind of indecision. It retraced a little bit, nothing to worry about because my stop loss, I got enough room. Remember, I have 15 pips in here, right? So no problem. It retraced. Then the next candle retraced a little and came down. Kind of a decision, correction, and came down, came down, came down, came down, came down. And here, around this area, here in this area, I got my profits, right? That's it. What is another thing that I should take into account with a shooting star? Of course, remember that I always have to analyze other indicators. If I take a look at the very behavior, not on the shooting star, but on the candle that triggered my trade, I can observe something very interesting here. My trigger candle is this one here, right? So if I observe, for instance, the behavior of the MACD, let me show you here. me show you here the MACD. So if you take a look at the behavior of my MACD here, my MACD 2 lines, you can observe that there is a nice short move. But the important thing here is that the red line, my red indicator, is above the blue line. That is a bearish indicator, despite that there is somehow here, of course, a divergence. But the red line is above the blue line, and that is a good indication. Another thing that I have to observe is the behavior of stochastics. Stochastics is sloping down, and the dotted red line is above the green line. That is a good indication that the move is somehow in this moment heading downwards, right? So this is basically a short video about the behavior formation. And well, let's talk about the psychology behind the shooting star. Basically, the shooting star appears as a sign of exhaustion. It means that buyers are losing strength. And there is the proof, right, in this very chart that I showed. So it means that trap traders, right, contributed to the selling pressure, okay? So basically, is exhaustion. And well, as a final thing, the best shooting stars form at key resistance levels where small money takes profit, right? So those are things that we have to always bear in mind. So my dear traders, thank you very much. And I hope this video was useful. And if you like it, okay, please subscribe and share. Thank you very much. Bye-bye.